Hello traders, Gary Wagner here. It is 12:15 in Honolulu, 6:15 in New York on Tuesday, 23rd day of August, 2022, and this is the daily report for gold and silver. Traders, after 6 consecutive days of lower pricing that was characterized by consistent and consecutive lower highs and lower lows, we saw a reversal today with gold trading with a higher low, a higher high, and a higher close. The most active December contract gained $12.70 or 0.73% and is currently fixed at $1,761.10. This was partially due to dollar weakness. The dollar declined by 0.47%, with the index currently fixed at 108.465. Lastly, silver gained about 0.6%. That's a total of about 12 cents, just shy of $19 per ounce at $18.99.5. The dollar has gained value at a pretty rapid pace, easy to see on this daily chart. When we look at the last 7 trading days prior to today, they were all green candles, and in essence, moved the dollar index from the open of 105 to today's high that came in well above 109. However, the key difference today was the dollar closed lower. It actually declined by approximately 0.5% and is currently fixed at 108.465. What that did is really boosted gold higher, and we'll look at that in a second. But it's interesting to see this relative value of the dollar and compare it historically. And to do that, we have to pull up a 2-month chart. We have just put up a candlestick chart in which each candle represents 2 months of trading. If we take a look at the high and current price that we have in the dollar index, which we can see right here, this over the last 2 months, we've really got to go back in time to between 2000 and 2003 to see the last time that the dollar index had this value. The first occurrence happened in 2000, and that was during an ascent that really peaked out just above 120, and then, of course, a tremendous sell-off, taking the value of the dollar index from just above 120 down to approximately 72. That is a devaluation of the dollar of about 50%. Of course, what is important to us is the fact that the dollar did decline by about 0.5% today, because gold did rise, but it rose just a little bit over 0.5%, meaning the majority of today's gains in gold were related to dollar weakness, with the remainder directly attributable to market participants actually bidding gold higher. We have effectively filled the gap, and this is a gap that we have been waiting for quite some time as a good entry price. Now, we are looking to raise our stops up rather quickly because on Friday, Powell will speak at the Jackson Hole Symposium, and we could expect to see some increased volatility because of that. That being said, in terms of what we are looking at for support and resistance right now, I believe we effectively have extremely strong support at 1734. That is the 61.8% fib retracement, and this retracement data set is rather short. It covers the leg of the rally going from 1678 up to 1825, and a 61.8% retracement of that is just below the lows that actually came in. The next level we really want to see taken out is about 1770. That's the top of this gap. And I believe that we have the real potential to see it challenge 1800. Of course, that is highly dependent on statements by Federal Reserve members, including Chairman Powell, that will begin on Friday of this week. For right now, my recommendation is to maintain our current long position, maintain our stop, and look for an SMS text message and email with a new stop placement, as we will trail the stop higher as long as gold moves in our anticipated direction, which is higher. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.